Are you surprised at all
okay.
that the RBI chose to be neutral despite fiscal deficit going up, inflation going up? The expectation was it may turn hawkish.
Well, to be frank, I am a little surprised, but I think when you go through the details and the commentary, even in the past policies, where the action had been in the other direction, RBI had always been mentioning that they would be more data dependent and keep on watching for the more data to come before probably taking a firm shift in the stance. So I think it's what a kind of a little fine balancing act, though responding to your specific question. If I look at the commentary and if I look at the upside risk contributing factors, I think 6 of them are listed, and most of them, to me, it doesn't appear that they are the kind of risk which are going to go away after a short appearance. Whereas when you look at the commentary on mitigants, there are 2-3 mitigants, but they don't look so specific or probable as the risk looks. So that being the case, somewhere you get a kind of sense whether the problem is getting more structural in nature rather than the transitory. But having said that, yes, there are early signs of some of the growth coming back. Some of the indicators are coming. Some early indicators are visible. So probably I think RBI has taken a stance of wait and watch for some more time, look for more data, and then probably take a view on the stance. So this is how I look at it.
Okay. Right, Dr. Ms. Mundra, the question also is, while you say you're a little surprised, I'm glad you're at least being frank there. As far as the fiscal deficit is concerned, fiscal slippage, and that's one of the 6 upside risk factors that has been clearly put out there. Fiscal slippage has not just happened for fiscal year 18. We are now going to get to fiscal deficit levels of 3% in fiscal year 21, and the governor highlighted that fact. Some policies back, I remember the RBI had very categorically stated that fiscal deficit will be a very important constituent of monetary policy. And today we are just talking about the fiscal consolidation trajectory. Why this change in stance as far as the fisc is concerned?
Well, why this change is something I think is not something which I can reply to. But you see, as far as the fiscal deficit is concerned, and whether it is 3, whether it is 3.2, whether it is 3.3 in short to medium term, my take is I don't know what is so sacrosanct about where from the 3% is coming or 3.2% is coming. To my mind, I think what is more important is the quality of fiscal deficit. If fiscal deficit has widened, the resources where they are put to use, how the utilization is monitored, and how the implementation takes place. To my mind, I think those are more vital and relevant questions rather than to remain so fixated on a certain percentage.
What about the MPC, the minimum, the MSP, sorry. What about the MSP for Kharif crops? The RBI has highlighted it as one of the risk factors, but of course the governor wants to await more details. Going forward, this is a risk factor that could only increase from here on. This isn't a risk that will reduce. Is that how you read it? MSP could be the big risk to inflation, or do you believe its overall impact on inflation will not be more than 10 to 15 basis points, and which is why the RBI will not be unduly worried about it?
See, it's not only the MSP. I think there are 2 components to it in the budget announcement. One is that the MSP should be such which should give at least 50% upside on the cost of production. That is one part of it, but there was another part of it that whenever the market prices and MSP, there is a differential and the procurement is not happening, then that will also be compensated. Now, number thing, both the components are how they will be calculated, how they will be tracked, and how they will be implemented. That is one very important thing. Particularly, from the various areas, various crops, 50% upside. So, see, presently, what was the situation, that while the MSP was always there, but since the procurement under MSP was not to the full extent, the impact, the resultant financial impact was probably to some extent it was subdued than what it could have been in the case of full procurement. But now if both the components are working, that number one, MSP is giving an assured upside over the cost of production, but even if procurement is not happening and there is a differential, then that will also be compensated. I think certainly it is something which is going to be significant. Having said that, at this point of time, I really see no method of really try to work out that what could be the dimension, what could be the the impact of this. But yes, the way it is, I think it will be significant, and there are very valid reasons to see it as a significant upside risk.
But Mr. Mundra, you do not, given the RBI's own projection of inflation levels at 5.1 to 5.6% in the first half of next fiscal, 5.1% in Q4 of this fiscal, 4.5 to 4.6% in the second half of next fiscal, how are you going to read between the lines? The RBI is obviously at this stage not talking about a rate hike, or do you expect one to come in and that will be dependent on what the US Fed really does?
I think if you say read between the line, and if I have to say in a single sentence, as I mentioned in my opening paragraph, that I don't know whether if we look at so many factors, whether the problem is getting more structural in the nature, or it can only be transitory. But I think it will not be fair to jump at a particular conclusion with some of the very recent data set, and I think it supports a mature policy and viewpoint to wait for some more data points to emerge, some more developments to take place, and then probably take a stance, final stance.
Right. Before I hand it over back to Maithili, I have a quick question for you. Are you surprised that given the market volatility and the carnage that the Dalal Street has seen, or given the yields that have spiked both in India and of course it mirrors what is happening the world over, are you surprised that the policy did not explicitly talk about the markets or even for that matter the bond markets?
I think it is quite a comprehensive policy document, and it has covered a range of the topics. Yes, one would always wish that it can cover everything which is happening around us. But I think probably the events which have been in offing for a longer time and which are going to affect for some time to come, vis-a-vis the events which might have a very recent origins and which where the firmly still the root cause need to be understood. I think it's prudent not to jump on to comment on some of those things, which can only add to the sometime
I think Maithili has a quick question on treasury losses there.
I have a question to you because RBI, monetary policy transmission has been a big bugbear with the Reserve Bank of India. And actually what we are seeing is that even though the RBI's repo rate has been kept constant since August 2017, 91-day treasury bills, in fact, the yield has gone up from about 6.19 in December to 6.4% today. So does it suggest that the RBI's talk of monetary transmission, even in the government bond market, the government securities market, where it should be almost 1:1, is failing? So you're only taking on banks because they are the ones you can take on. You can't take on government securities. Would that be a correct reading of the RBI's talk of monetary transmission, that actually it has failed?
I'm slightly, is it a question for me?
Yes, Mr. Mundra, my question to you is about monetary transmission. What transmission are we talking about when the government bond market yields for the 91-day treasury have gone up despite constant repo rates? So clearly the transmission policy is failed. So we should stop harping about transmission policy and accept that the Indian market is not a perfect market given government's large dominance in the government bond market, and you can never have one-to-one transmission, Mr. Mundra.
No, I fully agree with you. I see, number one, no one has ever said that Indian market is a perfect market. For that matter, to my mind, I think even the so-called perfect market in the globe, it has been proved time and again that they are really not so perfect as it has always been told. And if we look carefully the past pronouncement, I don't think it is ever expected that the transmission would be one-to-one, but it would also be, cause of concern if transmission is say 1-50 or 1-40 or 1-25. Also, having said that, let's understand that a large part of the private financing is still from the banking sector. We are talking about a bond market, but within bond market, how much is the share of corporate bond market? So when we look at the overall canvas of the transmission, obviously the bank credit represents a large part of it, and that is why to stress and expect that the policy action transmission should reflect on this book, I don't think there is something wrong with this. Of course, the market would be influenced by many factors, and again, if you look at a longer period of span, if most of the time market has responded to the policy rate in a more consistent manner, and if there is a period where some aberration has happened, I don't think that it would be fair to jump to a conclusion that it is something that the policy action or policy transmission has failed. Again, I think that will be a little hasty conclusion to reach.
I agree that I was taking a slightly extreme position just to provoke you, Mr. Mundra. But if I can ask you another question, which I agree is a slightly awkward question to ask you, and maybe you can duck it if you wish, is that why is it that the government has not been able to find a replacement for you as yet, Mr. Mundra?
I think you have given me the option, better I should do that. Anna, sitting in Mumbai, I would love to reply the Mumbai questions, not the Delhi questions.
Okay, so you agree this is the Delhi question. Thank you so much, Mr. Mundra. With that, Supriya, it's over to you once again.
Okay. All right, thank you very much. And Mr. Mundra, thanks very much for that. I could perhaps turn around and say you are irreplaceable, and which is why your replacement has been not found so soon. But thanks very much, Mr. Mundra, for joining us right here and giving us your perspective on monetary policy.